And welcome back to the RationalInvestor.com's Broiler Chicken Show. Bark, bark, bark. Happy Sunday, 16th of October. So we're already pretty much halfway through October, just plowing through the rest of this 2022. I'm not quite sure what exactly I'm going to talk to you guys about today. Purpose of this show is to sort of talk to the level one class program people. Whoa, look at that. You really are the bet. I think I remember we were joking about those kind of comments in previous shows. But in essence, to just sort of speak to questions that people might have in the course material. Looks like they got a whole bunch of cool stuff to look at, so that's kind of cool. Today is Sunday. Been working away on our I've got 3 affirmations that I'm trying to work away on here. Number 1, Liam and I finally getting our own house together. Number 2, trying to be the best PMA person I can possibly be for you guys. I have a bunch of experience in the marketplace, so I can speak to my experience. I don't know whether I'm really that good at predicting the future or not, but just try my best to try and show you guys sort of best practices at the very least on what to do. And actually, it's interesting, since I came back from our little Portugal trip, my day trading has been kind of splotchy, but the good part about it is I am an open book, so you can see how shitty my trading is right now. But I am basically journaling and diarizing and logging. And actually, what I was doing over the weekend was just simply practicing. And one good way to practice, although I don't know whether I have it on here. Yeah. Is I just randomly pick a time. I don't even know what date this is. This is September, early in September, so about a month or so ago. And I'm just sitting here practicing, just practicing. I really love this replay function. So you can see even this morning, I went 1, 2, 3 losses, or no, 3 trades, 2 wins, 1 loss. And this was where I was before I got called into another meeting here there a few minutes ago. Just keep practicing. So anyway, that's what I do. And actually, you find sometimes in trading, you are you go through win streaks. Sometimes in trading, you go through losing streaks, and you just got to ride it out. And probably the most important thing you got to remember is, when you are going through a little bit of a tougher time, maybe the market state's not agreeable with your setup, maybe your setup's not working, those kind of things. Just try and dial back the risk. And then once you start getting into the groove and start getting into the rhythm again, then you can start ramping risk back up again. So anyway, as it is right now, I had a couple of pretty good trades. I don't even know if this shows, but heading over to Portugal, I thought I had maybe I didn't even write the trade up in here, which would be kind of funny. But anyway, heading into Portugal, I had a really nice Bitcoin short on, and actually I even got filled on the exit order on the Bitcoin short into I think I was landing in London when I actually got the notice of my fill. And then following that, I've just been floundering quite a bit here since getting back from Portugal. But anyway, it's just my own personal journey. You're all going to have to go through these journeys. And, when you go on a wicked win streak and you're just killing it, oh, you look like a genius. Then you go on a losing streak and you can't sell a newsletter to anybody out there. So anyway, just is what it is. So my second affirmation is I want to just try and be the absolute best demonstrator of best practices I possibly can be. And I do like this, 30-day trial people. I walk through all of my trade setups, all my wins, all my losses, step by step by step. What did I do right? What did I do wrong? Could I have done better? And like I said, that's about the absolute best thing that I can impart on you guys is just showing up every day and just rinse and repeat. So that's sort of where my frame of mind is right now with regard to the site. I mean, unfortunately, I just don't have a crystal ball. I can't tell you what's going to happen in the future. It is what it is. And third affirmation is I was very excited about this Portugal idea of building a campus, sort of the first manifestation, physical manifestation of TRI. And super excited, super grateful, super appreciative of the ability to even move forward on this. So I've been doing a lot of work trying to sort of put all those pieces together, just see what this is going to look like. So we started off actually the original proposal. We were going to pick a place in the middle of the Pacific to do this. The feedback actually that I got is Hawaii is too far away, man. So reconsidered it, thought about Portugal as sort of a crypto-friendly place in Europe. And unfortunately, I think the local governments have sort of said, we're going to put the kibosh on all the crypto exempt from tax conversations. But anyway, it is what it is. But I still like the idea of moving forward with this project. So I've been working diligently, and I suppose all the people that are on the site that were interested in the Hawaiian project, I've basically taken the original proposal and we've morphed it into sort of the Portugal trading retreat. And I probably am going to send this document out to those people that were interested in participating in the plan years ago when it was originally Hawaii. And I wouldn't mind getting some feedback from all of you guys as to if you're still interested in participating in this. And we'll just sort of get an idea whether this thing is closable in the next few months. Because I think we have a half decent property. This is the place that we looked at. It's a bit expensive, but maybe we can negotiate a bit with them. But huge place, 17 bedrooms, 12 baths, fairly large lot. It's got a tennis court, swimming pool, the whole damn thing, all 9 yards. So anyway, I would really like to move forward on this project. So anyway, those are my 3 affirmations right now. Liam, be a demonstrator of best practices and good karma, and let's get that Portuguese campus up and running. So rah, 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 PMA, let's go. Now, the question ultimately is, how can I help you? I do, like I said, I do have a bit of experience. And unfortunately, all of my life experience, especially investing in the capital markets, kind of telling me to be a bit cautious here. And I think that kind of makes sense. The backdrop for investing, we have an old adage, don't fight the Fed. The Fed right now, of course, is not very happy, and they're raising the cost of borrowing money egregiously. And I think it's justified. Like I said, I did I used to call it the weekly commodity trend survey. So that's what WCTS stands for here. And I would just simply go through and look at all of the commodities and just simply identify what is the prevailing trend. Fairly easy exercise to go through. It's not that difficult. In fact, here is my weekly commodities sheet. So you can see all the different commodity markets I would follow on any given time. And then just simply ask, what is the 1330 moving average relationship on a weekly basis? I find this one of the easiest ways for you to identify trend. And then just simply ask, do we have any market structure? Clearly lots of M's here. Are we bumping up against longer term moving averages, things like the 4-year business cycle moving average? And then also too, what are some basic technical objectives? I mean, the irony of it all is you look at an image like this, we can all see where the base is. In fact, you could even, this will blow your mind, I suppose. I think you could make the argument that, Wyckoff checks, that's probably key support in the stock market right now. So, oh boy, we could have a bit of a mess ahead of us. So anyway, the point of the matter here is just looking at that image. That is a you better be cautious kind of image. There is the sell signal in the stock market back there just about almost a year ago, and right on Vladdy's sort of event there. FYI, and I would like to get into the habit of doing this. I don't really market this stuff. I'm not really the best marketer. What I really want to do, believe it or not, ironically enough, the biggest motivation for me to do all of these daily videos and to get Sjord to build my 1980s website into the 21st century, do all of these daily commentaries and shit, is I just want to get to be a better trader myself. And actually, it was really cool. The level tours this term, holy shit, do they ever have a treat? They've literally got 3 different professional traders who literally all of them could teach courses themselves as their instructors for this current term, Sharky, Murat, and Kiran. And just listening to the 3 of them, I mean, it's just like preaching the gospel. I mean, we all say basically the same thing, learn the damn process. And, how do you set yourself up to get better and better and better? And half of the reason why I do what I do here is I'm just trying to become a better trader myself. But, things like going through this weekly commodity trend survey, just so you have a very realistic idea from the get-go at the beginning of your week, what to expect in the marketplace, what is the prevailing trend, and are there any markets that are making new trends? This is incredibly valuable. To that end, I have, just because I didn't know how to do it before, but I wanted to diversify the video platform offering. This is the Broiler Chicken Show. I don't know why the picture's so crappy like that. But yesterday, for example, I put that weekly commodity trend survey. I know I asked Stuart if we could use a different image for this, but we did. I put this weekly commodity trend survey. That's the image that should be there. This video on the site. This I did through the Rumble website. So I don't know whether I have it up here or not, somewhere on all this. And as well, I like the idea of having sort of alternatives to YouTube. As well, too, I noticed that the Odyssey guys, they seem to be sort of ramping up and getting going again. So we might even think about, Chris, that'll be another sort of curveball for you to think about, is do we do the library credits angle for these videos? So anyway, long story short, this was done on the Rumble. I don't know whether I even have it. I think I do somewhere in here. That's this channel right here. So I put this on here yesterday. You can see I'm terrible at marketing these things. So nobody looks at them. But it was a good 40, 45 minutes. And specifically yesterday, I did the stocks and the bonds. So the week before, and of course, you can see it would be nice if I could figure out how to write this up. I thought I had this that, I also had what particular markets we looked at, but I did this yesterday. So just FYI. If you want to go look at the weekly commodity trend survey, these results, and just literally, Brian just walks through. 2 weeks ago, I did all the currencies, and I always start everything off with the US dollar. So I'll do the US dollar every week anyway. But 2 weeks ago, I did the currencies. And then this past yesterday, I did the financials and the stock indexes. And unfortunately, as I said there a few minutes ago, stock indexes, it's not a pretty time for capitalism. If anything, it should be a bit of a tough slog here. And, obviously, crypto being a part of the risk asset environment, probably going to be a little bit of a tough slog for Bitcoin and crypto as well. So, just FYI, and I'm pretty sure you've heard that message 100 times from me already. When I did talk about the interest rate markets yesterday, as we had said earlier, this is really what's driving the bus right now. This is the corporate interest rate market, what they call the Eurodollar futures, versus the Fed funds, which is the banking cartel, their guaranteed overnight rate. But remember, the banking cartel, they'll only lend money to the people that are inside the cartel. So if you think the Fed gives a flying fuck about your car loan, they do not care. Do they care about Joey Diamond and making sure Joey Diamond's ass is covered? Yeah. So point here is your car loan, it's probably more subject to this market, the Eurodollar market, than anything else. And this is a whole conversation unto itself. I have this conversation regularly with site members, in that we can actually there are tools available. It's fascinating how people in the public have no idea about this shit. But there are tools available in the marketplace to sort of gauge what's the health of the credit markets. This historically used to be called the TED spread, and that was in the time when the U.S. Treasury actually was the sort of guarantor for the market. Unfortunately, the Americans, and this is the socialist dream, which unfortunately is really a complete fraud. Joey Diamond has the nerve to call Bitcoin a fraud. I would call every Western government that's elected here a fraud, because they basically go to their populations and say, vote for me and I'll give you this, and vote for me and I'll give you that. And they're all basically lying to the public. It was remarkable. I watched just here locally in Vancouver. Hello, MM. They completely changed the whole city council. There was a big local election here, and the local, the party that wants to be in power, and now is, right, their platform was, we're going to get tough on crime. We're going to put another 100 police officers on the ground. Every corner of the city, there's going to be a police. Now, exactly who's going to pay for this? How do you actually fund this? Well, they never talk about that stuff. And I mean, you see what's going on in Great Britain right now. So, what's a fraud? Anyway, point of the matter here is the short-term interest rate market for the corporate market is it is leading the charge. And what I actually hear a lot of especially these socialist politicians that really don't understand any of this economic shit at all. There was some little lady there at the United Nations a week or two ago that's saying, hey, you can go in and stimulate the economy and do anything you want. Fed, stop raising rates. Well, actually, if you understand how this image works, you realize that the Fed doesn't have any choice. The Fed is this dark blue line. The market rate is this orange line. That's that Eurodollar contract I was talking to you about. And to say, well, the Fed can arbitrarily stop raising rates, right? Because that's this line going down, that's interest rates going up, and can actually turn it around and set the rate that whatever they want. That's just, it is fantasy. And it's these socialists that are doing this, but they don't understand it's the corporate interest rate market that's driving the bus. And this spread cannot get too out of line. In essence, that's what this teal line is. We used to call it, when it was the US government that was guaranteeing the market, we called it the T-bills versus the euro dollars, or the TED spread. Now we have to change this to the Fed spread, right? Because the US government and the T-bill market, they're bankrupt. They were bankrupt as of 2008. The only thing that's holding this economy together and this whole US hegemony system is the international banking cartel, the Rothschilds, right? They own and operate this global economy. It's just as simple as that. So the point of the matter here is that they are the ones, they're being quote unquote the lenders of last resort right now, but they have to respect the fact that the marketplace itself, the orange line, is puking out. This is the market setting interest rates, and they cannot let this spread get too wide. In fact, the magic number on this spread is 1.0, or basically 1 full percentage point. That's where my mouse is right now. And you can see through this whole interest rates rising, and inflation and all that, you can see the very noticeable battle that this relationship has had, oscillating all around this 1.0 level, right? We actually had it here, but I think you can move it now. 1.0 is right there. So you can see a bit above, bit below, bit above, bit below, bit above, bit below, bit above, bit below. Now we're back above. So as long as this is trending higher and we are above 1.0 in this relationship, the Fed has no choice. They have to keep raising interest rates. And you might even find, and I'm not exactly sure when the next Fed meeting is, but I'm sure it's probably coming up pretty soon. But you might find that if this thing actually starts getting going in earnest, and we start getting above like 1.5, and the old highs were almost 2 full percent, you might find that the Fed has to come in and actually raise interest rates intra-meeting, which of course is just going to drive all the socialists crazy. So, just so you have a really clear understanding of, don't kid yourself. The like the woke people and all that, that Cortez politician down in the States. And then, there was this black politician lady that was saying that the Fed could literally decide who they're going to lend money to and who they're not going to lend money to drive the economy. All of that's nonsense. Right now, if anything, the powers that be, they're just trying desperately just to keep up with the market right now. And frankly speaking, they're falling behind. And you don't want this to fall behind too much. If the market actually starts losing confidence in the US Federal Reserve boards, then we've got real problems. So, yeah, you do not want this spread to get too far behind, which clearly means that the Fed must continue raising interest rates. So I don't know why I went down that road, but I hope that helps understand a little bit this whole. I really don't like when I hear people in the public start talking about how government bureaucrats and these technocrats can actually dictate interest rates. They can't. The market is just way too big. In fact, we even went through one day and calculated the size of this euro dollar market, like all of the contracts outstanding. It's something like $6 trillion. I mean, that's a hell of a lot of money. $6 trillion. I can tell you right now, the Fed does not have $6 trillion just lying around. And if they went and just turned the printing presses on, hey, we'll just print another $6 trillion. Well, you're damn loaf of bread. We've talked lots about this. You love the fact that your Bitcoin's 10, 20, 30, 40, $50,000. Well, I hope you all see now. Bitcoin, it was supposed to be that inflation hedge. And if Bitcoin price is going up, then that means all the other prices in your society are going to go up as well. So, I used to use the analogy of a Subway sandwich I used to buy in 2000. It was like, $2 or something like that. Now that Subway sandwich is like $5, $10. It's kind of sad, really. Anyway, blah, 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 blah. Point here is this is the backdrop of the current environment, and this is the whole idea. Don't fight the Fed. As long as this image looks like this, I think, risk takers, you just got to cool your jets. Now, having said that, like if we pop on over to, maybe we won't look at this here today. What we should probably look at is these funny little cryptocurrencies. There's an old adage that says that, if an asset loses 70, 80% of its value, it's probably going to be running out of steam to the downside. So here's a pretty good example. This is a name that one of TRICTO, he really likes this name. And you get down in this case 80, 90% loss of its recent highs, and it starts to look pretty compelling. So getting these kind of, this is what I would call a dead cat bounce on a name like this, it makes sense. The only issue here is this actually trending higher? I don't think so. I think, as I said, this is at the present, we'd still probably consider this nothing more than dead cat bouncy. And actually, we had one guy on the site, and you level oneers, you'll be learning this down the road. Colin likes to, especially, all the kids who are coming in and chasing crypto on the upside, to try and sort of slow them down a little bit. He likes to use 38.2s, and he calls it his Colin's pump chaser zone. So if we, let's see, we got here, pump chaser, there we go. So here's a good example where as this asset was moving up and up and up in price, if you wanted to chase this market, well, try and concentrate your efforts on Colin's pump chaser zone. I actually learned this 38.2 concept from an old NYSE trader, Ray Burchett. We used to call it, well, he used to call it, but I like the name, the first stop, where if this thing is actually still a bull, it'll stop at that 38.2 and then it'll just continue on. Sometimes, the market does not go any further, and you can see the correction here into that 38 zone and then turns back higher. And then one of our students, Colin, like I said there a minute ago, he got really good at using this tool, and he likes to call it his pump chaser zone. So all of his community, he would just simply say, look, don't chase this move up here, just wait for the 38.2s, and if you really love this thing, well, this is where you want to be thinking about buying. It works on the downside as well, unfortunately. So, I don't know whether this is the end of the bear or not. I mean, does anybody? My hunch is we're probably close to the end. I suppose maybe you could even go off of that high there. So what that says is if we use that same logic, you probably don't want to be chasing down here and shorting down here. But in this particular case, instead of the pump chaser zone, I would call this the dump chaser zone. It's the same logic. So if you thought that this was a bear and lower highs and lower lows defines a bear, and if we change this to a log chart, you can see this thing's got 1,000,000 miles to go just to get back to the old high or old lows. So if it really wanted to go all the way down here, I mean, you can sort of see the cascading. You probably don't want to short this thing until we rally back into dump chaser zones, then start to M out And then you start thinking about joining the short side of the party. I suppose also too, on the flip side, like I don't really like the idea of shorting something like this here. That's a terrible trade location. You can see there's a big honking W down in here. So probably structurally down in this area is probably not a bad area to look for a some sort of bounce. I suppose also too you can make the argument A to B, and we just clone that and we go C to D. So again, pretty good downside targets. If you were either selling up here or shorting up here, do you want to maybe think about taking some profits down in this area? I think that makes sense. So a lot of these names, I don't think that they're in good short locations anymore. And you might get these very violent bounces out of sort of bottoming ranges over the next little while. Is this a new bull market? I don't know. Is this the market going through the process of basing? And now, interesting enough, and this is an interesting one because you can see they've given a hell of a lot of this rally back, but I suppose one might argue that since we have this base in here, what I would want to do is things like reload zones and see if you can start hunting. Like I used to love, we used to work with a guy, James, and we used to call it the Jesse James setup. And that was just basically if you got a single tick stab back against the 78.6. We also called this the shark setup, where basically this isn't quite a shark, but if you could get market structure to line up off of that 78.6, to a certain degree it sort of is. So something like that. You see this original W, all of these W's down in here against this 78.6. So you can see we're coming screaming back down. Ironically enough, if I did think that this was a bottom and I would want to try and sneak my way in, I would actually have my bid working right down here. And you can see we're pretty darn close to getting filled. So, anybody who missed this move and was like, oh man, the rally's over, I'm totally left out. I would actually argue that the market's actually backing up into a half decent little trade window there. So there is 78.6. You can see the blow off top. You can see the market coming back. You can even see there's a couple key lows to work with. If you're thinking about working some stink bids, maybe there's a nice liquidity pool right underneath that low. I don't really see any gaps, although this does look a little suspicious down in here. There's a little bit of a gap right in there. Ooh, there's a big one there. Those would be levels that I'd want to work bids at. So anyway, I think it would behoove you, of course, don't like chase markets that have jumped up here. If you're gonna, this is where the whole concept of the reload zone comes back really, really helpful here. As you probably want to be thinking about, okay, can I get buy signals in green boxes now, right down in here? Couple names that really look interesting. Now this one's already gone, so I don't know. The interesting thing is if you could have snuck in here, even that number there, 9, there's 20. So what a great analogy of that. I'm going to buy, let's say in this case at 10 cents. And as soon as this darn thing doubles in price, I'm going to let half of it go, right? And 100%, that's double your purchase price. Where's 100? Right down there, 99 point whatever. So how ironic, eh? Those people that sold half on a double, hell, they could throw their order in to buy that original position right back and have on 2 cars. You'd have on 1 car from the original double bottom breakout. And I mean, W's are W's are W's. So you can't say that that wasn't too difficult to see. right there. You sell half on a double, and then you throw your order in at 78.6. You can see, because I'm talking about this, they'll probably take it away from there now. But you could maybe throw in your second bid. We'll make that guy blue and get your next car going. And of course, have your whatever the double this purchase price is. So where's a double? There it is there. So get your next sell half on a double order working, just like that. And we used to call this last cycle, how many cars could you get on your car carrier? Because eventually, venture cap works in this crazy crypto market. Eventually, these names will get their act together and we will get rallies back up top. I mean, my hunch is that just to, ironically enough, all this is a trading range. This is not what I would consider trending higher. It's just nothing more than just banging around in a range. And I would fully expect, in fact, actually, there is the 50% rule. This is the keep it simple, stupid kind of method of technical analysis, where all you really want to do is just identify the midpoint of a trading range, and that should be your technical objective. So you can see that that says 50 cents. So that's 5x coming in off of 10. That's not a bad trade. But if you could sneak your way in and, buy, sell half on a double, buy, sell half on a double. Actually, I guess that was up there. Beg your pardon. Let's try that again. So buy, sell half on a double, buy, sell half on a double, buy, sell half on a double, buy, sell half on a double. How many cars can you get on so that when we do actually get up into this price objective, maybe you ring the whole damn register up here and declare victory? You might have 1 car, 2 cars, 3 cars, maybe 4 cars, where all you did was just that reload zone concept, sell half on a double, reload, sell half on a double, reload, sell half on a double. So by the time you get up here, you're actually selling multiple positions at that one price objective. That's the way that we used to play the venture market in that 15 to 17 cycle. The last cycle, I really wasn't that active. I just sort of let Stuart and Julian do their thing, and they had some fun in Luna. So I won't comment on all that. But for whatever it's worth, if you do go and look at my personal Twitter page, that's what this image was. So how the fuck does the guy take $500 and ramp it up to, in this case, actually that printed? Actually, that's kind of weird. That's only 100,000, but I know this thing got up to like $700,000 or $800,000. I do remember I had said that when we first started this, the goal was to take $500 and turn it into 100,000. So how do you do that? And the way that you do that is this, buy, sell half on a double, reload, buy, sell half on a double, reload, buy, sell half on a double, reload, buy, sell half on a double. And you just keep doing it over and over and over and over. And I'm not going to say it's easy, but I will say that when you go through these kind of things, oh my goodness, it gets absolutely insane. The numbers just get ridiculous. So anyway, and you can kind of see, just even in here, maybe you went and originally, and hindsight's always 2020, but what the hell, we'll just go through this. Maybe down here, right? You said, hey, that Beamish guy, he seems to like his W, so I went and bought there. So boom, you're long from what is that? 3-4 cents. Hey, way to go. So at 8 cents, wherever the hell that is, boom, out goes half. Right. So then you draw your fib and you say, down at reload zones, I'm going to reload. Yeah, what a surprise, 88.6, 78.6. Brian loves that kind of area. There is Mountain Man. I would say on venture cap stocks, I kind of like, and I might even change the language in the course material, if I've ever rewrite it. If you're going to do venture cap, your reload zone should probably be like 78.6 to 88.6. You can see this one, you had to actually go all the way right back down to the original bottom. I mean, that sometimes happens in this space, venture cap. But anyway, so bought, sold half on a double. Maybe I'll even be conservative and say I went and bought my second car there at 78.6. All right. So I've got this first car working now. I've got a second car. This number here is, we'll say it's even that number there. That says 4.8. Let's call it 5. So that means at 10 cents, out goes half. So that's right into there. So at this point, right now, I started out with 1 unit. I sold half, so I've got him sitting there. Now I have this original half unit working, and I just went and took that original capital and put it into this unit, and now I have 1 full unit totally free and clear, and I have my original capital back. You can do the same thing here. I don't know whether we got it. Oh, just missed 78.6. I don't know. Maybe you throw in a stink bid down in this area. Yeah, let's say, just for argument's sake, let's say, boom, you got filled. Hey, way to go. You're so awesome. So that's 5.5. All right. Well, then at 11 and change. So let's go maybe like 13, somewhere in there. Boom. Out goes another half, right? So, the point here is at this point now, you've got 3 free cars on the books and you have your original capital back in your hands. And then all of a sudden, life-changing events, blah, blah, blah. So there's a pretty good example, hindsight, of course, 2020. Hopefully you get the idea of what I'm trying to convey to you. Are we doing the same thing again? Well, only time will tell, but it wouldn't surprise me. This is the way the capitalist game is played. So get ready. Now, this is an interesting one because it's a specialty situation. You got to know sort of the LTO story. Sjord happens to be fairly sort of intimate with the story. So I think on balance, it makes sense why Sjord is involved. I don't know whether I would ever be involved in something like this. But anyway, hats off to any of the TRIers that rode his coattails and got some free coins out of that. And if anything, I love the idea that you buy, like here, you sell half on a double, and then you want to take those free coins and you want to just go throw them on staking or, throw them even on a USB device and bury it in your backyard so you never see the coins. And then when we get into, holy crap, do you see what's happening here, Gertie? Man, that's when you go dig them up out of the backyard. I don't know. It's up to you. But I don't really have a problem. The most important thing in this whole game, though, is to get that risk-free trade. That is the most important. Ironically enough, this kind of thing here, this is, of course, your Lambos, look how smart I am, and whoa. But I would say this is the easy part of investing. When you have something do this, the hard part is getting into a position, this here, buying here, selling half here, and just getting that risk-free trade. Once you're into this, then who cares? Just the anxiety of seeing something like this happen, you go, this is venture capital. Let's see what the fuck it does. I could do anything, right? But there's no risk involved. So the stress of that trade is incredibly small. This right here is the hardest part of this whole game. If you can figure this part of the equation out, you're set for life. But what it means is you have to force yourself. I am not allowed to buy up here. Can't do it. Why? Because realistically thinking about a double in price from 75 means that I have to realistically expect this thing to go up here. Now, is that realistic? The market is already screaming up. Rah! And you have to see it double in price from here to get that risk-free trade-off. Is that realistic? And I would just simply have to say, no, it isn't. And this is where most people fail at this game, is they chase and they buy up markets. Now, the way that you prevent that is you take your handy dandy little 50% rule. This is W.D. Gann, lived 100, 200 years ago. Geez, I guess he was born about 150 years ago. There's 50% rule. You can see, I've already have it on here. And your job is to simply say, if I do buy down here, and the market does a very normal 50% retracement of the recent trading range. This is basically a range, bottom end of the range, top end of the range. This is what naturally should happen, right? If you ever think about what does a bull market look like, they say, well, usually it's higher highs and higher lows. But if you actually do the math, what you see is that this point from here to here, well, what a surprise, reload zone. But let's not overthink that. Let's just do 50% rules. All right, what a surprise. Boom, boom. That's what naturally is supposed to happen. Let's go the other direction, right? Let's go from here. Whoops. I don't want that. From here to here. 50% rule. Well, let's go from here to here. 50% rule. Let's go from here to here. 50% rule. This is the way nature works. Which I know sounds like duh, but you'd be surprised how many people it's like there's your trend, but they can't see the forest through the trees, what's actually happening here. How does nature actually do this trending thing? So the point of the matter here is, and if you're here to learn something and you want to, Brian, I want to get something out of this broadcast that, I'm watching this free show and I want to learn something. Well, the first thing you learn is ask yourself, if I buy here, and this is like what, 9-10 cents, and it does a natural 50% retracement, can I get myself into a position where I can sell half on the double and get that risk-free trade? Now, according to our theory here, right, this is sort of like here and here. So I'm measuring from the top end of the range up here down to the bottom end of the range down here. Can I realistically get a 50% retracement? That's this number, to sell half on a double. Now, if the market is a trend, then what this thing really will probably do is go like this, then like this, then like this, then like this, then like that. But as long as I have this trade done, then I don't care what happens over here. This is just all gravy. And this is how you get rich in this world. It's just as simple as that. I mean, you never know where that, Jesus, look at this one right here, right? Just like what I just said before, a proof of the pudding's in the eating. Here's your 50% rule. There's the double bottom. Of course, Brian, and he loves his double bottoms. That's 3.5 cents. 50% rules, 13. Can I get that risk-free trade-off? Boom, done. And then what happens with the rest? Well, the rest, for a while, you actually look like a doofus. Well, I should have sold everything. But Mr. Life-Changing Events comes along and he says something stupid. And the irony of it all, this is the worst part about this whole stupid game, is that what did this guy actually do who runs this story right up here? He actually went out into the public and started shilling and using the expression, life-changing events, buy my coin up here, you'll make a fortune. And then you found out that the insiders of the goddamn company were selling up here. That's called conflict of interest, and you can get sued over that in the United States. The fact that he was over in Europe, I think he got away with it. But the point of the matter here is you do not want to be buying, and especially when the director comes out and starts saying, "Oh, buy my story, you'll get rich." That's the time when you want to get the fuck out of there. But if you're long all these free coins from this level, and really you're long from here, but you got your free position established here, all of this is all gravy to you. You're like, geez, I'm just getting richer and richer by the day. And the irony of it all is that when the crash comes, what do you think the odds are? We'll do a fib from this high back to this low, that this is a reload zone. And the smart money is just reloading once again. Oh, there's my 78.6. And really this is, anybody who follows our Wednesday shows, this is like Benkoff and the Benkoff check, right? Even right there. In fact, actually, that's kind of what Bitcoin's doing right now. So anyway, I don't know. Somebody give me some feedback. Was that rant there of any value, or am I just wasting everybody's time? I don't know. It is an interesting scenario what's going on there. Chris says he likes that. All right, that's good. So we're now in the environment. What's the message I'm really trying to convey to you guys? Do you understand that we are not like, do you remember like last I don't know, last fall, everybody and their brother was bullish of crypto. Remember that idiot Allen was going on fucking Saturday Night Live toting his Dogecoin story. I mean, the irony of it all is that shouldn't he be going on to public media and now talking about how wonderful his coin is? Isn't that, what did I tell you guys to do? What is the natural level that this thing should retrace back to? What is the natural place that this thing should trade back to? Any of you can do this at any given point in time. This was the very first lesson I ever learned in technical analysis. Keep it simple, stupid. I even gave you the guy's name. So, I don't know, maybe you, hey, there you go. Thank you, big BT. All right, Eddie says he likes the stream. That's cool. Mr. Somber. Yeah. Yeah. The funny thing is if you want to laugh, this is, I think, the one gentleman in his entire life, he never smiled. He was not allowed to smile. But that's basically who we're talking about here. And it's not rocket science, but the irony of it all is that often people discount this stuff because a lot of times they don't even want to hear it, because they did come in and they listened to Alan and they watched him on Saturday Night Live and they said, gee whiz, I think I'm going to go and buy some Dogecoin there because he's so fucking sexy. And that wasn't a very good decision. Way to go, you idiots. Now, who's the idiot? Is the idiot, I personally think the idiot is actually Alan going on Saturday Night Live and not expressly telling the audience, do not buy Dogecoin here. This is an overvalued asset and you are asking for trouble. Frankly speaking, I think Alan has a fiduciary responsibility to say that. But did he? No. Welcome to our fucked up human civilization. It's like we humans, we don't even give a shit about each other. And if anything, half of our job is how can we fuck our fellow humans over? And I told you to begin this video, my 3 affirmations. I want to live with my boy. I want to make a positive difference in this world. And I want to bring this damn Portugal campus into reality so that we can keep moving this project forward. I want these campuses all over the world by the time I'm dead. So maybe I'm not a human. I don't know. Anyway, point here is, ironically enough, you should all be able to tell me now roughly where this thing is going. I mean, that's the irony of all of this. Okay, let's maybe make it a little easier. Based on our 50% retracement law of nature, is this asset now overvalued or undervalued? Anyone? Undervalued. How would you figure out what a natural level for this thing to bounce back to is? It's exactly what I just told you a minute ago. Remember, think Mr. Smiley Face. How about the 50% rule? Why can't we do a 50% rule going back up? There's nothing wrong with that. So just like the LTO, ironically enough, and we often say this in our public, shills and all this. This is the only business. I mean, where is Alan now? Why is he not going out there and telling everybody in the world, my Dogecoin is now cheap? If you actually want to get in on the cheap, it's looking pretty darn cheap. And then, we said earlier, ideally, and this was a gentleman, Simon Dixon, who I respect immensely. He is one guy, I think, in the crypto space that actually is not going to purposely screw you over. Mind you, I don't know what he's doing these days, but when I used to listen to him, he used to always start off every conversation about Bitcoin, just simply says, is Bitcoin corrected 70 to 80% of its value? If it has, then it's probably in a buy zone. So it's interesting right now, if we look at the weekly chart on Bitcoin and we draw the bottom of our fib retracement level, this is drawn off of $600. I'd actually make the argument, because these numbers are so small, you're probably best just to simply make this zero. Boom. And are we at 70 to 80% correction in price? Not quite. We're almost there, but not quite. And my conversations of late have been along the lines that I kind of think that we're in this kind of part of the market right now. I just can't tell whether we actually have to bounce here off of this trend line break. See that trend line break that's happening right now? And if we can bounce on the other side of that, notice when that happened, that was actually a 50% rally in price off of that low, but it was still contained within the context of a bear. So is that what we're looking at right now as a potential scenario here in the market? Keep in mind, this is a little bit off topic, but nonetheless, Brian loves to rant. So I think I show you guys this quite a bit, but a lot of the decennial people are actually, and this is a popular study. Damn it, I always wanted to remember. I think his name's Edgar. I want to say it starts with a E, maybe Edwards, something like that. Anyway, guy lived a couple hundred years ago. He actually sort of figured out that it turns out that if you take the average of all the years that end in whatever the number is, turns out that that's actually a pretty darn good roadmap for what to expect. Gotta say, this year was basically spot on. If we look at the stock market here, I use the Dow. Let's get rid of all this stuff. Right, so there's the start of the year right there. Boom. I guess we don't need the moving averages on here, right? So puke out, bottom. Do we rally now into the end of the year? That's what this image is, eh? Puke out, bottom. Do we rally into the end of the year now? Also, too, this is an election year down in the States. So we do like to follow sort of what is the typical pattern of price in election years. And specifically, second year new Democratic president, that would be Sleepy Joe here. So there is the beginning of the year. In this particular case, the market actually on average moved higher there into the spring. And usually that's the way the market goes: buy when it snows, sell when it goes. Usually, sell in May and walk away. So this is a very normal pattern for the stock market. The fact that we just rolled over hard here from January 1st, of course, Vladdy and all his dickhead moves there over in Eastern Europe. It's a pretty tough year. But also, too, to add insult to injury, not to overwhelm you, but just keep in mind that, and we've been barking about this all bloody year. So it's certainly like it's not news, but we have to understand that it's fascinating. Now, this study was written like 200 years ago. And this study, it says that we're supposed to bottom in the year 2023. So from 2019, of course, the stock market topped in like January 2020. Then we went through the whole sickness crap. And then, we went through the massive hyperinflation money printing. And if you actually look at a stock market chart, ironically enough, if you take all the money printing into account, you actually see that, oh, gee whiz, there is Donald Trump's stock market peak in the end of 19, beginning of 2020. And you can see what we've done. So if you take all the money printing into account, we're nowhere near the Donald Trump stock market peaks. And that's the tragedy of our society, is nobody in the public sees this image. The only image the public ever sees is this image. And interestingly enough, we are now at basically the Donald Trump stock market peak levels. But I would argue that this is a lie, which is so sad. But anyway, that's here and there. So according to Mr. Benner, we're supposed to bottom in 23, which means, we're 2022. So we're sort of like right here. We still got another shitty, crappy piece ahead of us until we hit that low. And actually, what I find really interesting now is everybody was all jazzed about Winnie the Pooh and his Belt and Road initiatives and all that crap. And, oh my God, China is going to become the world's biggest economy and all that. Now I'm hearing talk that all of the money that China lent out to all this Belt and Road initiative and building all that out, it's all blowing up all over the world. And of course, China is just absolutely hip deep in debt right now. And the whole Chinese dream is just imploding on itself. It's quite beautiful to watch. Because frankly speaking, I don't think totalitarian dictatorships, just like I don't think I don't think that these people should be rewarded for bad behavior. Ironically enough, the person who tells you buy reload zones, don't chase markets, those are the people that should be rewarded in this world. And yet, ironically enough, like I said to you before, I don't know what it is about this society, but those people are actually not rewarded. They're punished for sort of being cautionary, right? That's the whole ant and grasshopper scenario. And for some fucking reason in this world, we just keep rewarding the grasshoppers over and over and over. So ironically enough, I actually like the idea that the grasshoppers should all freeze to death right now. They really should. I watched a video that said that there's more than 65 million empty apartments in China right now. That means you could, like, the whole country of Germany could have a free home in China right now because of all this stupid, irresponsible overdevelopment. Those grasshoppers should freeze to death. But no, we'll just print more money and Joey Diamond gets another fucking Rolls Royce. I don't get it, this stupid world. Anyway, blah, blah, blah. Brian, he gets all upset. So point of the matter here is we're in a shitty environment here right now. And we got to get through this 2022, 2023. We should, once we're through 23, we should have a nice little reprieve for a couple years. And I've talked to you guys lots about this before because ironically enough, we already have the roadmap. It's beautiful to watch. Let's see if I can show you the roadmap. I think it's this one. Let's see what we got here. There we go. There's our roadmap. So here's the 12-16 cycle. Here's the 16-20 cycle. And here we are, 2024. I'm worried that there still needs to be one more FU dump here just to break the kids' hearts. But I'm also worried too that they might just, because of this decennial, and this is also an election event right here. You notice that risk following the election, and there's also a big eclipse coming up here. So all our celestial people know that that's usually a really big pivot in the market. Also, too, there's that big China's print CCP circle jerk. All the totalitarian dictators get together and congratulate themselves on how much money they've stolen from the populace. Blah, 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 all that. Anyway, point here is that all comes to a head here at the end of October. And then I wonder whether there's going to be some sort of big face rip rally into the end of the year. I could very easily see that scenario playing out. So be forewarned, and I am hearing a lot of people. And, when you see things like that LTO kind of acting the way that it is, keep in mind, I believe that cryptocurrencies are actually a really good sort of leading indicator. And I got to say, man, these assets, they are just right on their knees. They're right down at the bottom end of the range. Here's another one that's spitting up. This is a weekly W here. There was actually one that we found on our system, and I was just so beautiful. I was like, Stuart, you got to just go buy some of this shit. Now, this is this Sushi, and if I understand correctly, it's kind of, is this actually even real cryptocurrencies? I'm not even quite sure. I think this is like a centralized, decentralized exchange. I'm not totally hip on all the technology, but Brian, I mean, gee whiz, what letter of the alphabet does that look like down there, right? And what was really interesting was on our screener, and of course, I love this about our screeners, is they're going to pick up these signals as they're coming in. And actually, this is the basic screener platform. What I really want to show you is my screeners. And if we see down here, I thought it was really interesting that this Sushi, which I think, and I don't know whether it is a Binance product or not, but I found it fascinating. I mean, versus USD, you can see the W's. And I love, Brian, he loves his W's. So that's a reason unto itself for me to get interested. I thought it was interesting on this screener, and what jumped out at me was I love weekly bullish key reversals. And there it is, BNB versus Sushi. And that came in on the 3rd of October, a weekly signal. So I don't even know what this looks like now. Let's go see what it looks like. So there is the key reversal, of course, W's. Looks like the market's moving higher. It's accepted the key reversal level. I don't know. I mean, I wouldn't surprise me if we have like a bit of a trough, then a neckline, then a head, then another trough, and this thing just makes a big head and shoulders and heads higher. But you tell me, based on everything that I talked to you about Doge and 50% rules and stuff, is there any money to be made on something like this going forward? Look at this. You can't even see the damn price action here. This is ridiculous. What time is it? It's 12:30. Yeah, you're right. Fuck, I got it. No, I got about an hour. I got about an hour. So somebody asked me on YouTube, can you please look at sushi and tell us why the hell you're interested in this darn thing? I went and got Stuart to buy some of this yesterday, just FYI. Could this thing swim around here a little bit? I'd like him to put about 5-10 Gs into this. So, but I just want to get the ball rolling. And what I usually like to do is I like to just go and grab a little bit. And then now we'll start doing things like drawing reload zones. And if we can get some sort of pullback down into the bottom end of range. Now this is versus BMB, so I wouldn't even really use that. I do like to use the basic the proxies for fiat. This tether seems to be very popular these days. Is this the ultimate winner in these stable coins? I don't know, but I do know that on the Wednesday shows, we use this tether proxy a lot. But you can see there's the double bottom on the dailies. There is that big weekly bottom. There's also this W right in here. So as I said, I just asked Stuart, can you just go and grab some? And then what I'll do is I'll just simply, and I don't know where this thing's going to bottom. Probably what happened there is you can see, boom, 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 boom. What a surprise. We just got a big fat W that came in right through the reload zone. Oh, what a shock. I mean, this stuff is ridiculously cliche after a while. And you might even argue, like I showed you before, right? You can even do reload zones within reload zones. And remember I had said earlier, there was their shark setup. So that, my friends, right there is a perfect working example of that shark setup, where you let the bottom come in. It's got beautiful market structure. That is the floor. You just work your bid at 78.6. You get just a crazy ass fill, ding, 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 then it jackknifes higher. So for these guys who bought here, they have a really easy double. That's just nothing more. If you could get long down at this level, then really all you're asking for is a test of that level going forward to establish that risk-free trade. Is that realistic? I think it is. It's not unrealistic. As I said, I got Stuart just to go and grab some. I would like, and basically I asked him, hopefully we can do this, is just, on a once a week basis. I don't think you can work open orders on these things. I think he's trying to buy it in DeFi land. I'm not exactly positive. If he could work open orders, I wouldn't have a problem with him just working some stink bids here right around this dollar level. That's not a bad idea. But, just to even keep this as simple as possible, little old lady risk management, I don't want to overthink this. We've already W'd out. We could get a massive monthly W come in here. What I would just simply say is, why not just throw yourself on a dollar cost averaging plan? Maybe once a week, once a couple weeks, you just go and pick up a little bit of this. And then and this is exactly the conversation that Stuart had with the community about a week or two ago. Exact same conversation. Well, why not just go and start dollar cost averaging and just pick some up, and boom, Stuart's already got a double off. He's got a risk-free trade. Way to go. So I don't see any reason why that can't happen on this sushi. I mean, it looks like it's ready to go. And I mean, you tell me. If I get let's say, I have my fill up here. So instead of $2 as my double level, I'm going to say 275, 265, 270, anywhere. That's my double level. All right. So boom, I get sell half on a double. This is where, just having that free position on and just letting your money work for you. We'll keep it really, really simple. And we'll say, we're only going to get a 50% retracement. That's the absolute most that's going to come out of this rally. I think it's going to go a hell of a lot higher, but let's just assume 50% is our target. On your free position, that's still another 350% return on your money. All right. You bought, and we'll use our average cost, right? We bought it $1.40 or whatever, somewhere in that area. On the rest of the position, that's almost 10x from there. 10x. That's how you get rich in this game. The issue that I would just caution you about, though, it's very tempting to just buy and forget about it. But I'll tell you, and it's like this LTO, you don't know. I mean, don't kid yourself, people. I mean, when you have an asset that looks like that, great, awesome. Get in there and do something. And like I'm trying to show you with this LTO, if I can get back there. Where are you? No, I guess I missed it. Oh well. You don't know. I mean, maybe you have your sell half on a double rally, and then maybe this damn thing just craters and just parks itself for the next year or two down here. And if you didn't do that sell half on a double order, you're stuck. There's nothing you can do. I like the sell half on a double order because that way it's mechanical. You're not thinking. It's part of your plan. You just say, just got to do it. Once you're in that risk-free trade, you can't get hurt. So anyway, if anything, seeing what's happening here on this price action is a beautiful testament to that strategy because you don't know what's going to happen here. This whole rally might have just been bullshit. It might have just been like some sort of fake pump. It could happen. So anyway, all right. So I showed you a name that has already spat out doubles. So, you know, this is that kind of environment where this kind of stuff can happen. We are definitely down at the bottom end of the trading range. My hunch is, for whatever it's worth, that until we actually do two things, I think that this is nothing more than a trading range market. And the same thing with Sushi and all of these names, Bitcoin. First off, we should at any given point in time expect 38.2 retracements on any kind of move. I showed you Colin pump chaser zone on the way up. Why does Colin tell his community pump chaser zone? If you're going to buy, don't chase, wait for the 38.2s, because this is what naturally should happen with price. Now, we said earlier that really naturally 50%, but quite often you'll actually see, and this is why, like Colin, I think he likes to use his pump chaser zone or dump chaser zone, is quite often the market will rally up into sort of this 38.2 to 50%. Mr. Gann would say it should tag 50%, but you just don't know. And also, too, sometimes what happens is we'll go whoop, 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 and then boom. So can you actually hit this one day where it does hit that? Maybe you missed that. What you're really looking for is what's the message of the market, and a big old fat M like this would be I dead cat bounced into resistance, and now I'm rolling back over, and I'm probably going to go back down and test the lows. So that's what should happen at any given point in time on any market. So as I said, if you can identify a situation where you go, well, you know, if I buy at 10 cents and I look for that 38.2 and it's 29, that's a triple. Now, I heard somebody earlier going, well, why don't you sell a quarter on a quadruple, or sell a fifth on a quintuple, or sell a sixth on a whatever? You can. There's always a question of, are you getting a little greedy? And the sell half on a double strategy is just, it's so simple. It's not being overly greedy. I mean, you want to say, well, Brian, I'm going to sell a third on a triple. Okay, fine. I still think that that's greedy. And remember, this is Brian's boring. Brian's conservative. Brian was a financial planner. Brian was a full service broker. Brian was trying to maintain a book of business. You don't want to see your clients blow themselves up. That's the perspective that I come at whenever I talk to any of you guys. I will give you the most conservative, most, I want to stay in business. I want to be here 5 years from now telling you exactly the same message. I don't want to get sucked up. And, we even heard it last year. I mean, it was terrible. I heard guys that I actually thought were pretty good investors, and they started saying things like, well, and, you have to learn this. If you're a market participant, you have to learn this. And if you can't, then really you got no business being a shill in this marketplace, because you're going to get sued at some point. But what you have to understand is when the market, especially in this particular case, we had like this RSI study just continually making lower highs and lower lows, and then just kept doing it over and over. You have to, when you see this, especially I think if we look at it on a weekly chart, you have to be like, whoa, I cannot come in here and buy this, especially with that image right there. And the MACD looking like that. And then, what was worse is this rally took us to new highs, but momentum was nowhere near new highs. You have to have the professionalism to go, do not buy this. You are asking for trouble. But there were people that were literally saying technical analysis doesn't matter. This time it's different. Just go in and buy and you'll make a fortune, and kaboom. I mean, it's almost cliche how bad this is. The irony of it all right now is hopefully all of you are looking at this going, well, Brian, wait a minute. Isn't this a W that's coming in on this thing now? Down, up, down, breakout? Wow, that's interesting. And price itself is actually making lower lows. So unlike this scenario where this was bearish divergence, indicators making lower highs, price making higher highs, here we have the exact opposite scenario. Price is actually making lower highs, right? So that's this low. Well, I guess that low there corresponds with that low, and then that low there corresponds with that low. And yet this indicator is actually making higher lows. That's a bullish divergence. So ironically enough, we now should be thinking, and I don't know whether this is confirmed yet. It looks like it's darn close, eh? Right there. Oh boy, so close. What number is that? 65741. And this is 649 710. Oh, so we'll see how this finishes on the week. And sometimes you actually find that these things go up and then puke out. But there's a pretty darn big message that the market is actually trying to send us. Question is, are you listening? So a lot of this kind of message, and actually the way that I like to interpret the market is I say, first off, do I have trade location? You can see we've got reload zones now. So I'd say, yes, we have trade location. We're not chasing the market anymore. We're okay. Second, do we have indicator confirmation? Weekly bullish MACD divergences, fantastic analogy at that. Now, what do we need? And this is important, right? There's 3 steps to this. We're at step 2, but we're missing a really important ingredient. We need some price structure, i.e., can I please have a W? So that's what I really want to see here for me to really believe that this has turned the corner. And what's really interesting about this, as you can see, they're fighting like the Dickens right here. So we had a pretty powerful trend line. Boom, boom, boom. Interesting. Notice how we came back to the trend line. Actually, if we go down to the daily chart, you see this. Remember, we had our big, funny, well, actually, I guess it was about a week or two. We had the breakout above the trend line, but is that a trap? And I think, unfortunately, it was. Inside bar following the trend line break is a fail signal. Down, 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 down. Then we went into that funny little inflation report where the market, all the futures markets, the stocks and everything, they were all puking out. All we did is we just came back and we kissed the trend line from the other side. And then all of a sudden, wow, huge rally. But notice, and that was Thursday, notice Friday, boom, completely gave that back. So ironically enough, what I see here, which is, kind of an irony out of all of this, is we're just stuck in this trading range. Nothing really is happening here. So, yeah, well, exactly, Michael. Well said. This is a classic. And then we went after the stops type scenario here. Very nasty, very, very nasty. And, you want to keep it as simple as possible. I always tell people, just look for weekly W's, especially on things like line charts. If we change this to a line chart, is there any W here? I don't see anything yet. I see an M. I see a rally off of the lows. I see a move back to a trend line. Maybe we're going to test that bottom and then turn back up, and we will make a W. But there ain't no W's in price just yet. So I'm not really too excited about some sort of monster new bull market just yet. And then, if we go back to our fun little sort of study of what to expect, I think we're basically in this troughing window right now. What's interesting about this, of course, is that, in the 12-16 cycle, that was a Mike Hearn rage quit event. In this 16-20 cycle, this was actually caught everybody off guard, and everybody just absolutely puked out, and the space just went wicked depressive. And what was interesting through here was that Tone Vase guy, he was barking about how he had to see Bitcoin go to $1,000, and everybody and their brother in the space was bearish through here. Perfect. I don't know whether I hear that in Bitcoin yet. Still some bullishness. I'd love to see absolute capitulation. Nobody's interested in Bitcoin. It's a fraud. It's going to zero, and then I'll know that we have a bomb. Okay, so what I really should be doing here today, and let's spend the next 45 minutes doing this, is I should be actually answering your questions, which is kind of stupid of me, but anyway. It's the 16th here today. I think I'm not quite sure. I know somebody said that there was one or two questions from last week that I didn't answer. So I'll just start up here and let's see if I go through this. So we got this date format right. Next show is the 9th of October 22. Many alts have been looking a lot like this lately. This is Stack versus Tether. Yeah. Some strong FI coins. I'm thinking about FAX, and I already had sweet green candles as well as DeFi. Can you please tell me what TL is right for you? Maybe both. Yeah, I would. First off, I actually think this one to this one is actually the trend line I would be most interested in. These fast trend lines, perfectly valid, both of them. And I would say this one to this one is why you see some action down in there. And what I would do if you're drawing these trend lines is if we break this one and we put in a W on the other side, which is what we did, then I would expect the market to go up and test this trend line, which it's doing. And then to get a buy signal now, I have to see it move on the other side of this trend line, put in a W, and then move up. So it's going through the process. And then what I would also say to this person is draw a trend line off of that high and that high, because that confirmed on this move down into here. And that will be your next trend line resistance. So if we can break through here, put in a W, we should ratchet up into that trend line resistance. This is Stacks versus Tether. So let's see what happened. Is that here? Stacks, is that how you do it? Stacks. Tether. That one. All right. So I think you have this one. That I think is the primary resistance. And also too, notice that lines nicely with the top of value there, right? So that's a huge resistance level for me. Then you have this one, which I think is totally valid. So can I get a W on the other side of this? Is that a valid W? I don't know. And I hate to say it, but I think what happened was the market tried to move through here. It ran up into your next trend line. And look at that rejection. Douche, douche, douche. See you later. And now, unfortunately, we've busted any of this kind of action. So ironically enough, what I would actually expect, and unless you actually see some sort of bottom come in, is it actually should walk its way, and it might even just play in those in this trend line band for now. So I think both of these trend lines were valid when we broke this one, especially if you see these multiple trend lines like this. You got to say, well, okay, I mean, yeah, we've broken through, but now we've got this one to worry about. And this one was just one trend line too far. So yeah, I think you were right. We do this in the level 2 program. So if you can make it into the level 2 program, we talk lots about trend lines. All right, regarding CVX, I already sold my bag up here. Can you check the chart, please? I seem to remember we looked at this before, but let's oh yeah, I remember I had that funny little comment. Okay. I can't stand any crypto channels anymore. I guess your streams need more sexy ladies to bring viewers. I'm not asking you to grow a pair of tits, Brian. All right. Hi, last week in our level 3 class, you went through the daily checklist. Oh, yeah, and we did a little bit of that talk. Yes, I mentioned USNSS, the Holy Grail. Yeah, we talked a little bit about Linda Bradford Radke. Opening range trade. Chris, you know what? If probably we should get Chris to talk to you about opening range trades. He loves them. ERT, that's basically the Nebraska FU move. Then we've got we called it the Sebastian FU mode. Remember, I showed you the Canadian dollar setup in the library. OTE, this is the same thing as RLZ, but 10 years ago, I renamed this to something that I made it easier for me to convey the concept to the public. So I call this RLZ. Okay, I did not get to work through them yet. Maybe I work through them myself first, but can you go back to about another time? But if you have any feedback tomorrow's speech regarding these trade setups, please. It's pretty straightforward. I think I did show you the Canadian dollar. You know who you want to really corner and really pick his brain. And you're in the level 3 program, Mike. So get your trader workbench up and running. Then get into the day trader room and just chew Craig's ear. And he will be more than happy to tell you all about his CFU setup. OTE, this is a reload zone trade. It's really straightforward. I show you these on the site all the time. All right, number 5, if time permits, can you please give us a high-level overview of how corporate interest rates are determined? If corporate rates are free market rates, why do we even need the Fed? Your explanation of Fed spread is brilliant, and I do not see anyone else talking about it. Yeah, I mean the issue with corporate is not, they call it the Fed discount window. Now the sad thing is that not everybody's even allowed to go. I think there's only like about 2 dozen institutions that are even allowed to borrow money from the Fed. Because remember, it's Rothschilds, right? So the Fed is just, it's the 1%. The 1% is not going to give out money to you and I. If you ever drive up and down the street and you see any place that's, buy now, don't make payments for 12 months on OAC. Well, those are the people that shop that euro dollar market. All right, 6, Noom, hey, Mr. BB, I just started level 1. Unfortunately, it took me 1.5 years to find TRI. Well, that sucks. Where's that Josh guy? We got to try and shorten that search window down. So through this time, I acquired some bad habits with trading without proper education. Got to get rid of those. I had a back and forth with Shark, and it was most of the part, eat your vegetables. Okay. Which I know is important, but I don't have a reset switch to forget all I was doing until now. Yeah, it's going to be tough. What you got to do is you got to journal that shit out. What is it that you're talking about here, right? Forget all that I was doing. What was it that you're doing that doesn't work? Were you chasing? Were you buying up markets? Were you taking too big a risk? Were you not clearly identifying what your 3 reasons to act are? All this stuff has to come out in your journal. My best practice is to learn new things, understanding them, see how they are the proper way, and replace the bad things. Honestly, I wouldn't go that route. I would I don't mean to be rude, Noom, But I would just say, look at, you don't know anything. Everything that you learned before is wrong. So let's just start fresh. I don't know anything. Most people that do well at TRI, they're the people, and actually I'm thinking of one lady in particular who seems this really resonated with her. And usually with the ladies, it does. With the men, it's like pulling fucking teeth. But with the ladies, for some reason, oh darn it, for some reason they buy this message. But if you want to do this right and you really want to like run your small business of trading, then you are this guy right now, and you don't know anything. I don't mean to be rude, but you don't know jack shit, and we got to start from scratch. The people that approach this program from this perspective do the best, and a lot of young men, this is impossible for them to do. You actually telling me, Brian, you're smarter than me? Fuck you. Here's my money, but fuck you. It's like, why are you taking my course if you won't do what I'm suggesting you do? It's the weirdest thing. And I'll have people that take the course and they go, love the material. Oh, yeah, it's very well presented. Yep, Grimm's awesome instructor. And then they go right back to doing exactly what they used to do before knowing me. And I can literally see subconsciously, they're not going to publicly come out and say, fuck you, Brian. But I can see subconsciously, whenever I talk to them, they are fighting me tooth and nail. And a lot of them, they end up never making that transition. And it's tragic. Hell, I worked with one guy for like 8 years now. Yeah, it'll be going on 9 next year. And he still is fighting me with a lot of the concepts. It drives you crazy. Why are you still working with me? It makes no sense. So anyway, if you do want to fancy yourself a rational investor, then I'd actually say that you have to mentally in your journal say, I am a baby. I don't know anything. I'm going for the next 12 years, or 12 years, maybe the next 12 weeks, the duration of this level 1 program. I'm just going to act like I don't know anything. I've never been taught anything before, and just do what we ask you to do. You want to get your value out of the money that you spent. That is exactly what I think you need to do. And I tell you, a lot of people can't do it. Anyway. So not just learn the process, but understand the process. That's good. There's nothing wrong with that. I'm still struggling with this a little bit. Okay. Well, and now, 30 years in, trust me, the worst part about this human psychology is that this is how we're hardwired. I don't know whether you guys are aware, but technically we are a worker species. We're like, if you kind of think of like a beehive and you have all the drones in the beehive and they're just going and they're doing their job. It's what they're pre-programmed to do. That's kind of what we humans are. So doing things like buying when other people are selling and selling when other people are buying it's against our natural programming. That's why we live in this sort of slavery type world that we live in, because frankly, we are slaves. We were built this way. They say that actually we were built as sort of a worker race to service higher intelligence species. But I suppose we won't go into that conversation today. So all I'm just trying to say here is that what I'm trying to get you to do is actually not normal. It's not what you want to do. It's not what your programming tells you to do. So it's difficult, and it might take a long time for you to undo the damage that's been done to you through your whole life. And also, I might even argue through your actual natural DNA. Could you please share your point of view on how a new level 1 course participant who traded before can, as best as possible, transition into the paper trading, eating the vegetables process? So first off, that's the best part about this is you just simply say, you know what, for the next 12 weeks, I'm just going to put my money away. Just forget about it. I mean, I think it's a good idea just to go to cash and put the money into a bank, or if you don't trust the banks, put your money in under the mattress or something. And just follow the process that we outline. And trust me, we're so redundant. We're so meticulous. At the end of this 12 weeks, if you don't know what the process is, nobody's ever going to be able to teach you. I mean, between the 2 or 3 hour lectures that you get every week that just go step by step by step, trying to teach you everything that we need you to learn. And then on top of that, you get a wonderful session with Grim once a week. Plus, he also has his office hours through the week. Plus, we have the TAs. You know, I got to tell you, Josh, the Joshua McGowan, that guy could easily be an instructor himself. So, you know, between all of that, the best thing for you to do is just put your money away and just do exactly what we ask you to do. And don't have any expectations. Just say, you know, okay, well, I've already paid you the money. So, I mean, it's not like, AKA Sharky, it's not like we're going to ask anything more of you, but you're asking for my number one suggestion, what to do. And that means at the beginning here, you got to get your trade journal up and running. You got to be journaling every day. That's why we have these tools right on the website, right? Where I want you every bloody day, wherever the hell it is. Let's go over here. I want you every single day to be in here journaling. What did you see? Did you take any trades? And at this point, you are paper trading. And the trades, you can dude up the charts. You can dude up levels. Now, really, you guys at this point, you don't understand any of this technical analysis crap and these squiggly lines. I mean, hell, your journal entry could be something as simple as this Beamish guy says he likes bottoms. So I am just going to do nothing more than I am going to buy if the market goes up through this high. And that high there is 35.13. This high here, 34.80. Have we gone through this 35.13 yet? No. So I'm going to buy if we go through this 35.13 level, and I'm going to risk to a break of these lows. That low 28.635, 28.671. So this low is lower. That, my friends, is a nice W. As simple as that. Now, we have a very strict rule that I'm not going to take a trade unless I realistically see at least a 2-to-1 risk reward. So there is 2-to-1, and that means that either one of two things are going to happen if we trade through this 513 level. Either the market is going to come back down and stop me out, of which I will book that this was a losing trade, or the market is going to go up and it's going to fill me on my sell order at this 34,400 area, and of which that is a winning trade. It's just as simple as that. Take a little picture, boink, copy. Hell, we can even do it right here as we speak. You want to see what this trade journal looks like? Well, it looks something like gotta let this thing load up. New entry. And we'll say, what did I observe? I think W is coming into the stock market. I'm going to buy the W if it comes in at, what did we say? 35.13, wasn't it? I'm going to risk to a break of the W's lows, and I am going to take profits at the 2-to-1 risk reward level. And we'll throw on a chart. Boom. Whoops, almost. What do I miss here? We got to go copy chart link. Oh, no, which tab is it? How many tabs do we have here? There we go. Boom. And what did I learn? That Brian guy is darn cool. Not. How do I feel? Confused. I don't know if this crap even works, but I paid my money, so I am going to do what these guys, girls, these people asked of me for the next 12 weeks. Simple as that. Boom. You now have journaled. And it looks as simple as that. See how easy that is? Pretty simple. And that's exactly what I want you to do. You do this over the next 12 weeks. This is your paper trading. Obviously, while you're going through eating your vegetables, you're going to be learning about things like trade journals, your trading plan, logging, journaling, right? So this is the journal, trade log. And as I said, you can see, since I've gotten back from Portugal, my trading's sucking horse cocks right now. So I had a couple nice wins while I was in Portugal and coming back. And then since I've been back, it's just been a fucking train wreck for me. So because of all of this, and if you go read my journals, you'll know that I've actually put myself in the penalty box. I've reduced my trade size to absolute minimum, and I'm not allowed to take real trades until I can actually start getting my act together. But the only way you're going to be able to see this is you have to journal and you have to log. And the worst part about logging is you can see right here, Brian is a fucking loser. Well, I mean, this is reality. This is not bullshit. Like the worst part about social media and the worst part about sort of learning how to trade online and all this is these cocksuckers will never show you this kind of performance. They will never admit. What I absolutely hate is working with guys who go on win streaks and they're like, "Ooh, see, I made this prediction and it worked. And ooh, look how smart I am. Look at my account balance." Then they go through one of these losing streaks and all of a sudden you never hear from them again. And it's like, and all of a sudden they're, "Well, how's that portfolio going?" "Oh, well, actually, I blew it up." "Well, let's not talk about that. I'm doing something else now." You can't do that. That's against the rules. So here is what you got to do. And you can see my process goal's been a little bit sloppy lately. Why am I not hitting 4 for 4s here right across the board? And, actually going back and looking at my trading and my journaling, the number one thing that I'm doing wrong here is poor higher time frame trade location. The only way that I'd be able to understand that and see that is by going through my journals and this is our fun little one we did. But, here, for example, I even said, going through here, so lost $35, but here we go. I'm making the same mistake repeatedly. Let's not take trades at poor 4-hour trade locations. So somebody asked this, are you data mining the journal? Well, absolutely I am, but this is my journal. I don't know whether you can really get a hell of a lot of information out of this. I'm right now, I mean, the irony of it all is that actually I'm not really doing that great day trading. But hopefully, I'm the demonstrator of best practices. I'm just showing you that, hey, we all have win streaks, we all have lose streaks. And hopefully, what ends up happening is you see that Brian starts to crisp up his 4-hour trade locations, and we start to actually put together some winning trades. And the bottom line here is that this is what a trader's life is all about. All right, anyway, moving on. Hope that helps, Noom. So put your money away. Just do exactly what we ask you to do. And the good part about it is the tools now are on the website that you can do all your journaling and all your trade logging straight off the website. You don't even have to use outside sources. I would like at some point down the road to be able to give you guys the ability to build trading plans and more robust tools to manage your assets on the website, but that'll come with time. So anyway, I hope that helps answer that question. And if anything, don't kid yourself, Noom. If you want to be a day trader, please understand this is not an easy job. It is a difficult job. When you're in that zone and you're killing it and you're on a winning strike, this job seems like it's the easiest job you've ever seen in your life, and the money is ridiculous. But make no mistake about it, when you're going through a losing streak, and just try to keep your head on straight, try to keep the losses manageable. I mean, you can see what kind of money I'm losing here while I'm on my losing streak, which sucks. I mean, I have to sit here and talk to you guys about the fact that I'm a loser. I mean, gee whiz, that's a great way to sell site subscriptions, isn't it? Where's the hell is damn log? Anyway, I thought I had it up here. The point being that this is not an easy job being a day trader. And sometimes you're going to go through these streaks, and you got to sort of figure out what it is that you're doing wrong, and you got to self-correct, which is not easy. But you can see I'm keeping the losses relatively small. And when my rule is if I have 2 losers in a row, then I shut it down for the day. And I've had to do that 2 or 3 times here over the past couple of weeks since I've been back from Portugal. So, yeah. Spooked. Spooked it's an interesting word. Because and if I'm at the point where I'm consistently losing money, then I'll actually put myself back on paper trading. And actually, one thing that I've done over the weekend to try and help myself get over this sort of losing streak is practice. And I think I showed you earlier, like this session that I did, this practice session that I did today, I had 1 winning trade. I had another, actually that trade never fired. And then I had 1 losing trade. So, the point here is anybody can do this at any given point in time. And you can pick any asset, right? This happens to be crude, but hey, we could do like, I don't know, how about soybeans? Everybody loves soybeans. And you just hit the replay button. Let's go as of here, and boom, now I am trading soybeans, and you can just sit and practice. So that's one way that helps me get through the bugaboo, is now I've ported myself to October 12th. I might want to go back a little bit further, and just, I don't want to know what happened in the future. That's why I love this replay function. And you just get in there and you start trading, right? I just hit the play button and away I go. And what I want to see for myself is I want to see that I can actually start stringing profitable days together. So as you can see, this replay thing, I'll just speed it up here just so you can see how it just marches along. Tick, 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 right? So, just as an example, what time is it? 1:45. I got to get out of here in about the next 45 minutes or so. So you can see it just ticking along. At this point, the irony of it all is it doesn't matter. It can be soybeans, it can be bonds, it can be gold, it can be Bitcoin. The point here is you're just practicing. Totally random asset. The setups don't really change. In this particular case, oh, what a surprise. You see that if you'd drawn a fib from that low back up to that high and done reload zones, that actually, that just, oh, wait a minute. Here we are. So, oh, what a surprise. That tag was a mountain man fail. Big surprise. You could do this range from here to here. And this is a bot setup. Well, did it make 33? Not quite. So, and I would just be doing this, right? Off of this low back up to this high. I want, of course, 50% retracement. So did that happen? Well, that is basically what that move is there. Oh, look at this. We got bottoms now coming into the market. I could do something like bot setup. So 33.66. That matches. Then I'm going to draw my 3 higher lows. And do I have a bot setup that's potentially coming in here? All right. So that's backwards. Boom, boom. All right. So you can see, does this bot setup actually fire? Turns out in this case, no, it did not. Did we go beyond 66 of that range? We did. So then that means that the bot is off the table. But now maybe what I'm thinking about, I mean, yeah, et cetera, et cetera, et cetera. It just goes on and on and on. But the point is, and actually Chris and I did this yesterday. Chris, you still with me? He has a very specific time of day that he likes to day trade. And so we just literally went through this. I can't remember what market it was. And we just mapped out times a day. All right. Is the market setting up setups, and just, draw your trade locations. In this particular case, I might do something like if I was trading soybeans, right? I might go, well, there's my reload zone to the upside. I'm actually thinking to the downside. So let's flip that around. Reverse. Right. So there's my reload zone. If I'm thinking reload zoney, then maybe I want to be hunting longs. And then, what do we see in here? Well, now I've got 1 low, 2 lows, 3 lows, 4 lows. Gee whiz, I got a whole bunch of lows here. Maybe my setup is that I like to trade fog and bombs. So if I see a double bottom, I'm going to buy the double bottom, and I'm going to risk to the break of the bottom, and I'm going to take profits at the fog and bomb level. And something like that. All right. Maybe what I'm going to do is I'm going to let the double bottom come in, and then I'm going to try and, let's see, did that double bottom come in? There's 138.7, 138.7. So really, this looks like a buy on stop scenario. So I just want to buy on a stop there. I'm going to risk this whole pattern. Remember, we had said earlier, ideally I want to see at least a 2-to-1 risk reward. So if I'm going to buy that whole bottom there, then that means I want to take profits up at least 2-to-1, somewhere in that area, right? So I mean, let's assume that you did actually buy that, and your job, like the person who was asking, what do I do to get rid of bad habits? Well, this is a great way to practice. So my target's way up top there. My stop is down here. Let's see what happens. You don't know what the fuck's going to happen. It's just the way the market works. Interesting how we got up to that 2.618 and then we're rejected. Can we work our way up into that 2-to-1? Anyway, point here is, this is the way that you get out of funks in the marketplace, is you just practice and practice and practice. Maybe your trading rules are, if I see a double top breakdown, then actually I want to think short. So I'm just going to take the trade off at that level, right? And my rule in my trading plan says if I see a double top, so boom, you book the trade, we're done. We log it, journal it, move on to the next one. Anyway, so to answer your question, that's and sort of also speak to how do I get rid of bad behavior? What I like, and especially now for you, is just do exactly what we ask you to do. And if you are feeling gun shy, Michael, there, paper trades, right? Dial the risk back. Like if I do feel so inspired that I actually want to start trading, I'm going to be trading the micro contracts. These are the big contracts. That's the E-mini. I actually am trading the micro contracts because I got to get better at trading my setups right now. So I've relegated myself to even the smallest possible risk out there. And then once I start building up a track record showing, okay, I can actually start making money again, well, I can always up the contract to the minis, or, get out of paper trading and actually trading real money, or move all the way up to the big contracts if I'm feeling so inclined. Well, I don't know. I hope that answers that question. Anyway, okay, let's keep moving on here. Raz says here from level 1 course, hello, I had a look at your generational fear greed chart below and then recreated it on my own current chart. It seems that we are perhaps following a similar greed cycle as the baby boomers one. Do you agree? I think it's they always say, number one, history never repeats itself, but it often rhymes. So that's these two. So this one, what does the millennial cycle look like? And this is the same sort of thing as what you're talking about. This is the baby boomers. This is the greatest generation. And this is what we've actually done in reality. My hunch is that by the end of this, we're going to be up here somewhere. Will it look exactly like one or the other? No. Will it look sort of like them? Yes. Will, yeah, so I'm just going to leave it like that. You can see even right now, we're not exactly like the baby boomers. We're not exactly like the greatest generation. Neither of them had a big health crisis there. But interestingly enough, the price action looks awfully similar, doesn't it? Sure does to me. That's my answer there. I see we are in a year ending in 2 with the second term Dem president. We are very close to the end of 52-week bear slide. Do you think at the end of November we will Wyckoff Jack down to 18,249.1? That must be on Bitcoin. Is this Bitcoin you're looking at? This is the 2nd of March 2022 low, which is the same as the low from March and also a monthly 200 MA. Oh, is that maybe that's the Dow? Yeah, it could be. This is where it gets dangerous. Everybody wants to be able to predict the future. I don't even know whether that's even really in your best interest to go down that road. I know that there are some people, they get such a thrill out of going, see, this is what I said was going to happen, and this is what happened. I don't really like that kind of thinking. I mean, I like the idea that you say, if you're going to do things like historical studies, then, this is our general roadmap. And, Benner says that we should expect 23 to be some sort of trough. And what's really cool, interestingly enough, 23 is going to align nicely with Bitcoin troughs. So what's really cool about this kind of study is we can actually overlay the Bitcoin charts over that. And you see, once again, there is 23 right there. Those are the 2 previous cycles. This is our current cycle. There's the Dow, and there is the greatest generation, and there's the baby boomers. So that's about as far as I want to go with regard to predictions. But I will say, the yellow cycle, we bottomed pretty much right here. Blue cycle, we bottomed pretty much here. Red cycle, it looks like we're bottoming right about here. Then we look at the stock market, same sort of logic. In 87, which of course you can see, we tracked very closely here coming out of the COVID lows. We actually bottomed there back in really the I guess the late spring, early winter, or late spring, early summer, and then we just started churning higher. And then in the greatest generation, we actually bottomed there last winter, and it was a straight line move up. So in a weird sort of way, this correction looks more like 87 or baby boomers 80s. But this extra dip here into this election year isn't in either of these forecasts. Having said that, I like that, as you pointed out, I really like this election year scenario. I really like that. And interestingly enough, if this was like all midterm elections, not that big of a deal. First term, midterm years, again, not that big of a deal. It just so, I don't know what it is. I think it has something to do with these damn socialists. But I think the socialists, stock markets don't like socialism. Stock markets are capitalists. So, what a surprise. When the socialists are in charge, the stock market doesn't do very well. Now, you'd have to go back and ask, and do you even know? Has the current president, is he socialist or I beg your pardon? And the baby boomers, was the president through their baby boomer cycle? Was he a socialist or was he a capitalist? I'll let you to figure that out on your own. And then through this cycle, right? This is the greatest generation. This was, I guess, coming out of the Second World War. Who was in charge of the US government at that point? Was he a socialist? Was he a capitalist? So I get the impression the reason why the market looks as bad as it does right here is because the socialists are in charge right now. So, this is why you can't say that history is going to repeat itself exactly, because all the variables usually are slightly different. And I think that with the socialists in here, ironically enough, I think that that actually cures the problem. I don't think that the American populace is nearly as socialist as the Democrats in power think that the American populace is. I think the only reason why the socialists got voted into power there was it was basically a demonstration vote against Mr. Trump and his crazy ass policies. So, and then also too, was maybe that election slightly rigged? Well, we won't open up that can of worms. Anyway, so I hope that helps answer that question. It's a very, very good question. And I don't think that this is sort of like, am I going to be the type of person that's going to say, I forecast that we go down, do a Wyckoff check, and we turn at 18,251.3. I'm not that type of person. What I will say is, okay, expecting that Wyckoff check, that's not a terrible idea. We'll cross that bridge when it comes to it, because clearly stock market is substantially higher, right? We're sitting at 29. What you're saying is we're going to head all the way down into these levels, right? Well, I guess no, 18,000, I guess that's these levels and that low. Is that something that I'm going to come out and say, yes, that is exactly what's going to happen? No. What if anything, what I said there earlier, you should all go, well, my hunch is that Beamish guy is going to be looking for a 50% retracement of that level. That would be the normal thing to have happen. Let's see if I can just quickly show you that. So that would be boom. Hey, I'm telling you to actually hunt a setup there. So wait a minute. I thought you said you were going to go down to 18,000. Well, maybe not. What I would say, very first thing first, you should do a 50% retracement. So that's sort of the keep it simple, stupid, like calling dump chaser zone. We'll even use that, right? So, oh, wow, look at that. So basically right now we are at the call-in dump chaser zone. So ironically enough, this is a really good analogy. You should not have chased the market up here. You should wait for the market to come down into the dump chaser zone, and then you want to start hunting your setups. So, and there's our 50% rule. This is sort of the keep it simple, stupid level. That's where I think ultimately we want to end up. Now, technicians would say, well, where do I want to be a buyer of this, right? This is just simply saying, where would the shorts be a good idea for them to take some profits. And that's basically just a revisit of all these lows in here and that high in there. I think that's going to be a pretty good traffic area. I could very easily see that just as we did this, and we used to do this all the time with Bitcoin, we would call this 38.2 ping pong. So we'd go from that low back up to that high, and where's a 38.2 there? So quite literally, we would say the market is trapped between these two, the pump chaser zone in here and the dump chaser zone in there. And that's what I think the market's going to do. And that's about as far as predictions I would go. To actually predict that we're going to dump all the way down into these levels down here, I think that's a dangerous prediction. It might. It's asking a bit much. And also too, just remember this, if you could. No, you know what? I'm not going to say either one way or the other. What I am going to say is the market is down. If we follow the weekly commodity trend survey, the trend is down until it isn't. And you know, those people that are hunting and trading setups, fine, you could take a long trade there, try buy that W if it comes in. Remember, that W has not come in yet. Looking for your counter trend rally, that might actually happen. The irony of it all is you might actually find that this rally happens, we go up against that high, then we come back down against that low, then we rally up, and then we resume our dump down. So over the next 6 months, that might be your price action. So that's probably, if you're going to put me into a corner and say, make a prediction, Brian, I would be thinking more along these lines than just that. Hope that helps. We can always revisit this. Should we then rocket up from there? Should we thus focus on growth, crypto and stocks rather than commodities? Okay, so that's a different conversation altogether. You know, if you look at, I definitely like the idea that the recession that we're having here is hitting the reset button. All right, you guys are all over there barking me to look at Bitcoin now. What's it doing? Oh, nice rally. There you go. That's good to see. Let's see what we got here. Problem is, what time is it? Oh, it's 1 o'clock. I got to get out of here. Jesus, I talked way too much. Anyway, I guess we'll do it over here. Let's go BTC, USD. And you guys like to look at this versus Tether. Okay, so I know you guys are super excited, but looking at that image, what do you think, John? How do you pronounce that? Jonah? Is that a violent break? That's a daily price chart. Is that a huge rally? I mean, it's nice. I don't know whether I'd really say it's too big. As we were sort of saying there earlier, I like the idea. Oh, darn. I like the idea of, can I get a W on the other side of this trend line? Something like that. And we'll zoom in here. This is a daily chart too. All right, so what have we done here? Is there anything actually happening here? Remember, we posted earlier that that's the top end of your range and that's the bottom end of your range. So is anything actually happening here? I mean, it's nice, don't get me wrong. What I think I see here, and Paul, he was just the boss, our Wednesday show co-host. He had kind of pointed out that he would be more than happy to be a buyer against the bottom end of the range. And I got to say, that was a fucking killer trade. You got all that low, that low, that low. So coming in here and buying against those lows, brilliant. What do you think about taking a trade right here? What do you think Brian's going to say about taking a trade right there? Is that a good trade location? I don't know whether Jonah, you understand how we do it at TRI, but we go trade location, indicator confirmation, price structure. I suppose you could argue, we are kind of down at the bottom end of trading ranges. So it's not a terrible location, but oh my goodness, look at that profile. Oh boy, man, that looks bothersome. Don't like the look of that. Very, very dangerous. So I appreciate that you guys are all super excited. Hey, it's a new bull market. We're all going to get rich. I don't know whether I really believe that or not. So what I see here, if anything, remember we did those 50% rules earlier? If we go from that high, this rally, right, the whole rally, notice, oh, gee whiz, 50% rule, doink. So market did exactly what it was supposed to do. Now that we did the 50% rule going this way, what do you think we should do now? How about 50% rule going the other way? So would it not seem logical that we should rally to 19,465 in here? What do you think, guys? Does that seem real? Seems logical to me. So that's what I think's happening here. I don't know whether I would call that a new bull market or not. The interesting thing about this is you might find that this silly market goes A to B, C to D. And if you're a long time, isn't that interesting? What's going on here? Meet. Oh, are we still recording? Interesting. The meet's telling me we're not. Or Zoom. Oh yeah. All right. Oh, I lost your camera. You just have a C now. All right. So is there a trade setup that we could be potentially hunting? But keep in mind, this is a lower time frame chart. This is not nannies, going investing. This is your swing trader time frames. Is there a setup that we could potentially be hunting? And the answer, of course, is yes. Could be a bot setup. So there's 33, there's 66, right in line there. If this is an A, B, C, D, then we go boobity boo, boobity shmoo. Can I see 3 higher lows set up underneath that 25 level to frame my risk on the trade? So that is there. Boom. There's 25. Oh, look. Interesting where we stopped the rally. We literally stopped the rally right at 50% and right at the bot entry level. Also, too, what you're going to have to learn over time, maybe you'll learn this, maybe you won't. This is an inverted head and shoulders here, right? And it kind of goes boom, 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 boom. And if that's the case, then our technical objective should be neckline, 2 heads, and then just replicate that off of the neckline. So up there, and replicate that, and up we go. Oh, look at that. So is this really a big surprise what's happened here? I don't think so. If this, and the sad thing is this head and shoulders, that's the end of the move, not the beginning of the move. Be careful here. If this is actually a bot where we want to head all the way up into this 20,000 area, then what I'd want to see is, okay, we got 1 low. We bounced up to the 25 level. Can I have a second low? And then can I get a third low? So now the chicken shit that Brian is, he can buy this level and I get this guy, and that guy to support my trade. and my stop will be below here. This is why I trade these setups, is that quite literally what's going on here is I'm going to let the market itself defend the trade. Right? We call these institutional fingerprints, where somebody came in at this point and said, no more down, you go up. Now that's bigger than you or I, Jonah. So that's obviously an institutional guy that put that bottom in there. So point being, also too, you want to add insult to injury. We have a setup on the site we like to call the Leanne James. And Leanne loved trendline breakouts. But our rule is, and actually this is interesting, because notice, look at where the market stopped. It stopped right at that damn trend line. Our rule is we really want to see this W completely on the other side of this trend line. We do not, the fact that the market is still below this trend line means that it's not really that strong. So if anything, what you want to see, a good technician, I just sort of drew this up here, but what I want to see based on the fact that we just saw LJs here is I want to see the market come up over here, then put in my W. And actually, a little bit better W, sorry about that. All right, come up here and then put in my nice W over here. And if it gets set up there, I got 1 low, 2 lows, 3 lows, 4 lows to defend my trade. I'll put my stop here. I'll enter at a break. And interesting how you can see the market's fading back against that level. So I don't think that this is the start of a new bull run. I think this was a manufactured trade. I mean, this is encouraging. Don't get me wrong. If you are a swing trader, hey, it's better to see the market going up than down, right? So that's a good sign. And maybe we set up a trade. And, when I come back from Liam this afternoon, I'll probably be looking at this and maybe I'll strap this on if this bot setup does come in here. But as it stands right now, no, it's too early to think of a trade. All right, I would like to address these questions as much as I possibly can. And then if I have time, I'll reason back to, or I'll circle back to the YouTube page. Okay, so I guess you also did this chart as well, and this was your 18 year ending in 2, second term Dem president. I just don't think the dump is going to be that hard, and I might actually argue that you're running out of time. The market is about to pivot here, folks. If anything, well, I guess you don't know. This is not happening because of an accident. Also, too, where was it? It's in here somewhere. Where are you, you piece of poo? The LTO, where did it go? Anyway, LTO bottoming and rallying there. That's not an accident. Solana was super popular. This one, that bottoming. I mean, hell, that's a pretty good looking inverted head and shoulders. You could do the same bot setup on this thing. That sushi I was telling you about earlier, that's not an accident. What you see happening here, this is not an accident. And don't try and finesse this too much. Yes, there's a dump here, but we might be going through this dump. You know what you saw with that inflation number on Thursday? That might have been that dump. The point here is we get really close to the end of October here. I think there's an eclipse coming up in the next week or something. I think that is the big catalyst. And then also too, we have a huge options expiry coming up on this Friday, a massive one. So we are very, very close to this pivot. So I wouldn't get too bearish here. And if anything, seeing what I'm seeing, because remember, crypto and this EGLD, I know Paul, he really loves this one. It's perking up here. This is not an accident because, I believe that crypto is actually the ultimate leading indicator. So crypto actually bottoming and starting to turn up, that should not surprise us. The question that I have and the concern that I have is this the start of a new bull market, or is this nothing more than just a dead cat bounce off of the lows? We rally into the end of the year and then we roll over and head back down. Kind of like this. I could easily see stock market bottoms, rallies into the end of the year. Then we put in a big old top sort of January, February, and we start working our way right back down again. I could very easily see that. Oh boy. Oh geez. Oh goodness. All right. What am I gonna do here? Okay, let's see if I can. Let's see if I can get through one more. So let's see what we got here. Geo level 1. Okay, hi Brian. I'm looking for how to improve the nibble LOL part of my nanny vesting plan for the future. Growth greed cycle stocks, especially canceling BTC, please. Okay, in a chart where we apply 52-week WD GAM 50% rule, and we have good reasons to take a trade, good location RLZ or even lower. Brian 13 EMA cross confirm, conservative style confirm. Bull dig and against Willie out of stupid with WRSI and then exchange first weekly W formed. I then start my first nibbling. Wow, okay. That looks pretty good plan. I don't see what's wrong with that. Which criteria should I use to know when to make the next nibbles to reach my 5% in this scenario where the weekly price makes higher high and higher low, holds in a range, higher low and lower low. Thanks to the mental curve, to Liam. Cool. I would just simply say, if you have all of this in place, then I think it's just a question of every time a new W comes in, you just add a little bit more, add a little bit more, add a little bit more. So I think that's what this is, higher highs and higher lows. Anytime you see a W, try and make sure that it's still in that reload zone location. But if it starts making W's, just nibble away. You could also use fractals, right? Fractals would be not a bad way to add as well. Maybe on like a daily price chart, every time the market fractals, you just go and add a little bit more. So where would be a good example? Maybe this EGLD. This isn't a bad one, right? So let's say down here, maybe this, yeah, okay. So there's your bottom, and you're kind of like, well, Brian, this thing's come down 1,000,000 miles. I'd like to start accumulating. Really, you might even argue this one. Oh, actually, I don't know where the bottom is on this. Okay, well, that's fine. So yeah, actually, this one's even better. So here, we'll go there to there. So you're like, well, and keep in mind, venture capital, if you're going to be buying on these things, you might have to expect it to go to new lows. Oh, actually, interesting how it didn't even do that. Okay, well, this one isn't bad. So, all right, there we are. So here is your reload zone. And, keep it simple, stupid, nanny nibbles, all that kind of fun stuff. Starting to get divs. Maybe you're like, okay, Brian, I'm starting to get the divs all starting to come in on this move down here. So if we see, yep, there is bull div there. So at this point, starting to get W's coming in. This first W fired right there. Whoops. Well, anyway, right there. And there's my first buy signal. So now, just for hypothetical sake, let's say, boom, you just went and bought that one. Then you say, all right, every time I see a W, I'm going to add. And I would even suggest maybe stagger it over like a month or two period. So, obviously, if a week goes by, maybe give it a little bit more time. There's another level, right? So I went and bought right here. Market comes down. Hey, there's another W. So I buy right here. Market M's out, starts coming down. Oh, geez, now I'm underwater. Oh, God, where's the net? Oh, there's a W there. So I'm going to buy a little bit there. Well, it looks like another W is going to come in. So I'll buy a little bit there. So the point here is you end up getting maybe a nice average cost, like somewhere in that area there. I don't have a problem with that. As I said, fractals, you could wait for that fractal signal. So I'm going to buy that. This is a railroad tracks, a little bit more violent, but you can see those work pretty well. Nothing in here. Whoop, there's one there. So we can buy that. There's another one that came in there. You can buy that. It's up to you. 6, 1, half dozen the other. There's a fractal there. You can buy that one. There's not really a right or wrong to this. What I would just simply say is give yourself enough time, right? Like I like the idea of taking like especially around year end, because keep in mind, venture capital usually is under heavy pressure into year end. And the old adage, right, goes buy when it snows, sell when it goes. So if you can actually start this plan, I don't know whether I really like the idea of starting the plan in the middle of the summer. I do like the idea of starting the plan heading into the buy when it snows, sell when it goes scenario. So either way, that might be a little bit of an aggressive cadence. I like the idea, little old ladies, I don't hear from you on that often, maybe like once a month, maybe like once every couple months. Maybe we'll get rid of that one and go there to there and then there to there. Maybe do it every couple months. Nothing wrong with that. So those are a couple things. And, once you get into that window, okay, it's time to think about buying again. You want to go into setup hunting mode. I'm not going to buy that, Brian, because what I want to see is I want to see a bull div. I don't have the bull div here. Oh, there's the bull div. Now it came in. All right, so now the bull div is confirmed right here. Now I want to start hunting a W, and there's the W right there. All right, so that is now my second purchase right there. Either way, perfectly fine by me. I don't mind the regular timed purchases and take away the sort of second guessing. I'm just averaging my way in. I don't mind you using fractals to try and help you time your purchases. You might be a little bit more active because fractals hop in more often. You might want to go through the 3-step setup process every single purchase. Do I have, and this particular one right here, notice that, oh, gee whiz, that happens to be a trade location, reload zone. We know we marked out the bull div and there's a W. So yeah, I can time my purchase. All three of those approaches are perfectly fine by me. It's just really a question of how active do you want to be? Obviously, Mr. I'm just going to time my purchases once every month or 2 months. You don't have to be that active. Mr. I'm going to hunt the killer trade setups, and I'm only going to take the setups when my time window says that I can start getting active again and hunting an ad. All right, it's perfectly fine too. All right, so I hope that helps answer that question. All right, hello, Brian. Some analysts not here at TRI think that the end of the next 4-year cycle, which roughly will be 2006, will start a significant multi-year bear market after 17 years of growth. Yeah, I mean, I wouldn't be surprised if I say, and if you look at your Benner cycle, the problem is 26 is a minor. I do like the idea that we hit a major cycle peak in 25. So this would be my sort of 17-year, or 35, beg your pardon. If I said 25, I meant 35. I do like the idea that this is our 17.5-year fear greed cycles. So I would be looking for a cycle peak into those early 30s. But I do also like the idea that the cycle peak is going to be messy. So if you go DJI, notice, like, I think that we're more like the greatest generation this cycle than baby boomers because of the interest rate scenario. And notice that, like, I think personally, we are like right, I think we are right about here. In fact, I would even say that we're right there. I think there's going to be a counter trend rally back into resistance. And then in 2023, I think we have to make one more low. So this is what the next growth cycle looks like. But notice it's not like it goes up like kind of like, well, like 29, right? 28, 29, it was just like fucking orgy central into that peak. This cycle is not going to look like orgy central. It's going to look like this rolling top. So that's the scenario that I see. So as you know, like maybe 2026 is like this. And if you actually measure the high of 2026 following the next cycle, you'll notice that actually that's going to trade at basically that same level. And you might find that 10, 15 years later, the market is still trading at exactly that same level. That's what I think our next sort of greed cycle peak is going to look like, which means that, yeah, it's not going to be like the way that the dot-com boom peak was. And this happens to be a commodities peak, your Bitcoin peak, the way that it went straight up there. I think it's going to be more of a rounded peak that looks more like those 1960s. So I hope that helps. Do you agree with this statement on cycles after 2026 will look like previous ones, 3 years up, 1 year down? Could be. 2026, this was supposed to be the big China Belt and Road Initiative. What's scary about this is that there's a lot of sort of Vedic astrologers and stuff, and we've got one guy on the site who's, oh my God, super jazzed with this stuff. And he is very fearful of 2027. And I have a funny feeling that the end of this coming decade is probably going to be our big third world war. I mean, it's interesting how last century, that same respective cycle, the early 40s, obviously we were very busy in Europe, but probably more importantly, we were kind of preoccupied with one particular country in the Pacific. So that was through here, right? Second World War. But one might argue that into the end of the 40s, the beginning of the 1950s, this was actually, I don't know whether you'd say it's the bigger war, but it was, I think, really the Asian War, where you had almost like two ideological sort of camps went head to head, right, in the Korean Peninsula. And I have a funny feeling that was never resolved. And I have a funny feeling that in 2030, that's the big global war this go round. Last century, the big global war was really all about Europe and dealing with Japan. And Japan was never going to win against the West. I mean, the only reason why they did what they did was out of desperation because the Americans put an oil embargo on them. I might argue that the way that the chips are falling right now, China has a far bigger vested interest in taking Taiwan. This whole one China policy. And I could see that into the end of this decade, that comes to a head. Like I like the historical analogy that Ukraine right now is the equivalent to the Spanish Civil War, and also like what the Italians did in Ethiopia. So this is sort of the opening salvo of basically a decade-long period where we humans go into the business of murdering each other. So party, party. Once we get out of that event, then I think actually there's a pretty good rally window following that. But frankly speaking, being able to predict that, I don't know. And then kind of like to your thought, this cycle, I think it's going to be a muted bull market. They used to call this the nifty 50s kind of market. And I would expect that same sort of thing where, this go around, of course, is going to be like Amazon's and Microsoft's and, whatever fucking Allen's doing at whatever point down the road. And those kind of things. I think that definitely is in the cards. I'm not even quite sure what role Bitcoin and crypto plays in this, but I do actually like the idea that Bitcoin maybe needs to go quiet for a good 5-10 years to get ready for the next fear cycle, and then it goes back into apeshit crazy ass mode the next fear cycle. Anyway, we'll see how that goes. We'll cross that bridge when we come to it. Okay, that's 1:30. If I leave now, I can just get to Liam on time. So I think I'm going to have to leave it at that. And I guess what we'll do is, why don't we, we'll just make a note here. We'll start up the questions, I guess tomorrow's and tomorrow's daily brief. We'll lead off on the questions there. All right. And I only left out 2 or 3 questions, so that's not too bad. All right. I think we'll leave it at that. I don't know. I hope you guys got some value out of that. We got about 40, 50 viewers on the YouTube. Usually we get a good whack of people through the week who watch this. So give us some feedback. Maybe write down a comment or 2 about what you'd like to see more of and what you maybe would like to see less of. I don't know. Hit the like button, subscribe. Also, too, I noticed that we do various different shows through the week. And some people are saying they're not getting notified. So I'm not quite sure what's up with YouTube on that, but I think you got to hit that bell button to be notified. PMA for the win. Anybody who had a question for the school program, we'll just pick this up tomorrow on the daily brief. Okay. So don't feel as though you're hanging. It's just I talk way too much, and unfortunately, I got to get out of here and get over to Liam. So, okay, have yourselves a great day. Wish us luck. Wish Liam good karma. Always good when Liam's in a good mood and he's feeling positive. PMA for the win. All the best. And the only thing left for Brian to say at this point is bye for now.